Ladies and gentlemen, good morning. Nice to see you all. Wonderful start this morning. I thought the two early presentations were both valuable, both really good. We'll do our best to eclipse those, to give you a reason to stay. Introducing my panelists, although you probably know them. On my far left, he's never before been described as being on the far left. My friend Mickey Fulp.
I am left-handed, though.
In the center, and by the way, never having been described before as a centrist, Brent Cook. And on the far right, also never having been described as being on the far right before, my friend John Kaiser, all of whom you know. I'm Rick Rule, for those of you who don't know that.
On the very far right.
No, anarcho-capitalists are divorced from the whole experience. We treat Democrats and Republicans with equal disdain. What I'd like to start with this morning is the belief, or perhaps the hope, in current market conditions that passed as prologue. One of the interesting things about this panel is that this panel has been through a lot of market cycles. Sadly for me, none of them I think have been through as many cycles as I have, because none of them are as old as me. But the good news about market cycles in markets like this is that, at least in my experience, the bull market is caused in some fashion by a bear market. You heard earlier this morning that there are cycles and that the cycles repeat. And this is my fifth, I think, major cycle, and I believe that a good market will follow a bad market. And I want to see if my panelists agree with me. So what I would like, and I'd like quick answers to this because we go through a lot. I'm going to ask three questions. Will this market recover? Then I'm going to ask, what will cause the recovery? And then, of course, the $64 billion question, when will that occur? So I'm going to start on the far right. Mickey, will this market recover, or is this malaise permanent?
Absolutely.
Absolutely, it will recover.
Yes, sir.
Good answer. I mean, that was concise. Brent, is he smoking bad dope? Is it over?
Well, I guess the question is, what by the market? Do you mean the metals market, the
No,
junior mining market?
this is an exploration panel, Brent.
Okay, the junior.
You weren't chosen as an economist.
I think we're going to see recovery, yes.
Good. And John, you are an economist in a sense.
I think in terms of metal prices, we won't see a significant recovery for several years, which makes it tough slogging for the advanced companies to raise the capital to keep advancing their projects. I think the recovery could come in focused manner where we have new discoveries that make people think that, hey, the glass is half full again for these exploration plays. And that could come with the next drill hole in the right location, which has cloning replication capabilities.
Maybe I asked the question correctly. With regards to the exploration equities and exploration cycle, will we come back into an exploration cycle where at least the better juniors are in favor as opposed to shunned, in your opinion? Will we come out of this down cycle?
It's questionable that we will get an exploration-oriented cycle because that cycle ended in the 90s with the Bre-X fiasco. The last thing was a resource feasibility demonstration cycle created by the super cycle post-China higher metal prices and the rise in the gold price. Those rises are now over, and can we get the exploration going again? I'm not sure. We do need these discoveries to kickstart it.
Good, now we have the beginnings of a debate. Starting again on the far left. I love doing this to Mickey, this is great.
Yeah.
What, if you believe that we will have a new exploration cycle, an exploration equity cycle, what will be the catalyst? What will cause it to kick off?
Yeah, there are many catalysts that can occur, but I think a large exploration discovery in a relatively remote or unknown terrain is usually what kicks off a market, i.e. the diamond play in 1991, Boise's Bay, which I think was 1992, Eskay Creek, Himlo, those sorts of discoveries. Piarina in Peru in 96 kicked off in the middle of a boom, but created a parabolic, if you will, rise in exploration, which was killed by Bre-X.
I get to do the history. That's the easy part. I asked you what will kick off this cycle.
And I think I said a new exploration discovery in a relatively unknown terrain.
Later on, just so that we keep people awake, later on, not right now, I will ask you where that discovery will be made and who will make it and what the symbol will be. But Brent,
Okay.
Brent, you also answered in the affirmative. You said that we would come into a new exploration equity cycle. What do you think the catalyst will be?
Let me be more specific. I don't see, and I'm certainly not going to bet on a market, junior market, where all boats rise. I think what we're really going to see is the realization amongst the major mining companies that they do need to explore, they do need to buy new deposits, and that is going to kick off a general bullish consensus when the general public also realizes that we are producing more than we're finding, and those have to be replaced, and that's what's going to kick off a very selective rise in quality companies.
I didn't, and I'm not being funny now, I didn't understand your answer. Are you saying that as a consequence of the fact that we're using a lot of metal and not discovering as much, that we're going to have a rise in metal prices?
I think we're going to...
Tying on to what John said?
We've got to have a rise in metal prices because the cost of production of all metals is rising so much that without a continual rise in metal prices, most of these deposits aren't going to make it to the new discoveries. The fact is that and I've seen this before, we're burning through one Carlin Trend a year and one Bingham Canyon a year. That's got to be replaced. Metal demand is not going to go down, and the majors are pulling back right now because they've been burned on acquisitions. But going forward, that's going to change, and they're going to be out there acquiring the discoveries that the few juniors are going to make. That's what's going to kick it off.
John, you answered part of this question in the prior question, and I guess you're skeptical with regards to the fact that we will have another exploration cycle. If we were going to have another exploration equity cycle, what do you think the kickoff would be?
It has to be in an area such as Nevada where we know there's an incredible endowment of gold. It has to be done by a junior with a model or new approach that opens up lots of possibilities. That's why one of my favorites is that Nevada Exploration Inc. company with their golden groundwater sampling, looking at the flanks of the basins where under gravel cover, where there's nothing in the range front to point the majors and others to look under the gravels. But if there's a new scientific theory that's come out too by John Montine, which makes a case that there's a lot more potential than just in the Carlin and the Battle Mountain cracks. And if we get a discovery that works as a proof of concept, we have that whole northern Nevada area open up again with anybody with a little scrap of land actually having a potential. The Voisey's Bay thing, Robert Friedland went and staked all the prospective ground before he let the news out. The juniors did get an area play, but there really was nothing to be found outside that. This cannot happen in Nevada because you don't know what's under the gravel.
I sort of think that what this market needs, as you say, is a very large discovery that I own the hell out of.
So why don't you buy the shares in that company? You've had the presentation.
Well, you don't want me to discuss it in public. If this event occurs, will it occur? Mickey, is there something prospective in terms of discovery that you see that that could turn this around? Do you think it's imminent with all the exploration dollars being spent by all the smart people in all the prospective places?
I'm of the opinion that we in the next couple of years are going to see some of the fruits of previous exploration. With all this money that's been thrown at the sector for the last 10 years, we are just now reaping the benefits of that, and I think for the stronger companies, that will continue. I don't know how many billions of dollars have been put into exploration. Probably my colleagues here, John Kaiser probably has that number, but it's a significant amount, and exploration lags money in the ground. I think that it is my opinion that we've got at least probably a couple of years to go in this present cycle, but what it's going to do is wash out about 2/3 of these juniors, I hope, that don't belong in the sector, and we end up with a leaner, meaner, cleaner business with a greater percentage of legitimate companies that have a real chance for discovery.
Brent?
I think
Timing.
Go ahead. If the question's when, I suspect we're going to start seeing later this year and into 2014 the larger mining companies start acquiring smaller mining companies.
And so you think that'll be the beginning of the upcycle? You think that there'll be an amalgamation cycle which will add hope and liquidity?
Very selectively. I think there's still a lot of companies out there that have projects they're working on that in the end, even if they're successful, there's no real upside to them. And that's the real problem we face is too many companies out exploring projects that in the end really don't have that potential.
And John? I know it's a difficult question for you to answer when you're not sure if, but if we were to have a discovery, which you're saying, I think if I understand your thesis, you're saying we either have to have a recovery in metal prices or we have to have a major discovery to kick off an exploration cycle, or both, preferably.
Well, yeah, I think a major discovery, but it has to be, again, one that others can try to duplicate. If it's like an isolated thing somewhere, that's not going to do the trick. It could happen this year on that Grass Valley play that McEwen Mining is now doing. He spent $60 million and came up with nothing just south of Cortez. Now he's offset a bit to the west with a brand new target generated in a way that wasn't really possible using conventional techniques. If he hits on that and has a 10, 20 million ounce discovery right there, you can actually see the Cortez Hill mine from this in an area where everybody says there's nothing there, then all of a sudden everything goes nuts in Nevada.
Great. Now let's start asking the questions in reverse order, and I'm going to make you go first as opposed to Mickey, which I can see makes Mickey happy. He can think through an answer. What you're proposing, of course, or supposing, is that the thing that would kick off the exploration cycle would be a big discovery that kicked off an area play. And you think the area play concept is still valid?
Yeah, it's not a contiguous area play in the old style where somebody has a discovery and then you have this huge halo in the hope that they didn't get it all. It has to be some new deposit model, some new way of looking at stuff that hasn't been done over a large area where it's impossible for one entity to own it all. I mean, perception in Nevada is that Newmont and Barrick own all that is meaningful that's left to be found. You blow that perception away and all of a sudden it's game on for the juniors.
Time out. Does the audience know, everybody in the audience know what an area play is? No. Okay, John, why don't you just give us a 60-second definition of an area play?
An area play emerges when somebody makes an unexpected, huge discovery that suddenly gets the glass half full for all kinds of regional potential. We've had things like Hemlo, Lac de Gras, the diamond play, Voisey's Bay, major multi-billion-dollar discovery, huge area around it. Sometimes more is found, most of the time not. But during that period, there's a lot of market action. It's easy to raise money. A drill target, you generate a target, the money's there. Right now in a market where you can have the most elaborate target and people will say, yeah, but I don't see the deposit yet, so I'm not going to pay anything for it. That psychology goes in complete reverse in an area play.
Brent, you may or may not remember that you and I had a discussion about area plays at your house at a barbecue. Given some of what we had in addition to steak, you may not remember the discussion. But it revolved around the fact that there are so many participants in the market now that have the ability to employ professional geologists like yourself and Mickey, that one of the reasons why things like the Yukon area play didn't work is that the degree of ignorance required to really spawn a big area play isn't in the market anymore as a consequence of the ability of moneyed interests and people who subscribe to competent newsletters run by competent observers to poke holes in some of the peripheral players in the area play. I'm speaking specifically about the experience we had with the Yukon, where there was a nice conceptual discovery, there were a lot of participants, all of the brand was in place, whether or not you agree that it was a Carlin model. The fact it was an enormous story, it was a Canadian story, and the play fizzled very, very, very quickly. Do you think the fact that there are so many more informed participants now makes the area play a less potent way to move a market?
Yeah, very much so. I do think the area play concept is probably more or less dead. I don't see that happening. There's just so much information available in an instant on the internet and through other people that know these things. I mean, I see a flash drill hole in Nevada. I can quickly go through it, plot it up, see where it is, if the information's available, look through the 43101 report, and call people who know the area, and realize that either one of the two things. This has been drilled before, they're just hitting it from a different angle, et cetera. So I think the information is much more available out there. Plus, we're dealing with a much more difficult environment to explore. 20 years ago, there was outcropping ore bodies. Today, almost everything we're going to find is going to be undercover of some sort. And that gets much more nebulous as to defining where to look, what's causing it, that sort of thing. So I think the area play, I mean, there's area plays everywhere. You ask where the next discovery is going to be. It's going to be in the Tethyan Belt, it's going to be the Carpathians, it's going to be in the Andes, it's going to be in Central America, it's going to be everywhere, but it's going to be very selective.
Mickey, area plays, legitimate speculative theme, salvation for this market?
Generally, area plays can be temporary salvations for a market and spur money raising and exploration, but you look at the history of the area plays that have occurred during let's say the last 2/3 of my career since 1990. We had the diamond play in Northwest Territories, which spurred a market out of the doldrums, an entire market, in fact. Resulted in immediately, or not immediately, and within 5 years or so, of 2 major mines, and that was it. Now there's a 3rd mine in the Northwest Territories. Voisey's Bay, 1 mine. Himlo in 1982, if memory serves, 1 mine. Eskay Creek, and I, for the life of me, can't remember exactly the date of that one, 1 mine. Piarina in 1996, 1 mine. The 2nd mine came up, discovered by a major in 2001, Alto Chicama. So historically, the area plays have generated no major mines or 1 other major mine other than the original discovery. But what they do is they spur money coming into the market, and it feeds on itself. I'll throw out an idea of a commodity play. We've seen those happen. The rare earth play, although it was a bubble, and we knew it was going to be a bubble, and ultimately it failed, it spurred a lot of money coming into this market in 2009, 2010.
I'm going to change things up again. My experience in exploration has been that the investment community focuses on properties. And as though these properties were assets. If you look at the fact, as Brent discussed yesterday, mineralized anomaly may have a 1 in 1,000 chance of being a mine, but requires a lot of expenditure. Most of these properties are liabilities, not assets. And in my life, I've made money with people. I regard the exploration process in California terms like a high-tech deal, sort of an intellectual property business, as opposed initially to a physical property business. And in my career, having had the ability or the luck, I'm not sure what it was, to identify people like Bob Quartermain and Ross Beatty and back them for 30 years. I was telling John in the hall before we came in, my relationship with these guys was like owning hundreds of well-located slot machines. They just kept paying me and paying me and paying me. My question is, given the advanced age of all of us, who, don't even try to hide, John, who are the next Ross Beattys? Who are the next Bob Quartermains? Who are the men and women under 40 that we can back now in a bad market and not have to pay the personality premium that we would have to pay for a Robert Friedland or a Bob Quartermain or a Ross Beatty? Who's the next generation? And John, I'll start with you. You follow the sector in real depth.
In terms of young people, none really come to mind at the moment. I think the 40 to 60 age group is really where you're going to have to look.
Well, now that I'm 60, I think that 40 is young. So,
I mean, for example, I was on a property trip on a site visit on Friday with the Benton group, the Stairs brothers. They're in their 40s, and they're competent. They're assembling all the kinds of talent needed, and a group like that you can look at as seeing, becoming the kind of Ross Beattys during the next 10 to 20 years.
Symbol?
Symbol?
Mm-hmm.
BEX.
Thank
They're
you.
actually here. Check Benton Resources.
Thank you.
15 cents or so.
Brent, same question. Who should we be looking at? We're in a down cycle. This is the time to back people, I think. Who should we be backing? The kids that we don't have to pay a premium for.
Yeah, I mean, to a large degree, it's a tough call. There's a lot of good people out there that they're doing really good work. It's tough to find these things. Three guys that I think are really worth watching, and I'm invested with them, is Steve Nano, who's the VP Exploration at Mirasol Resources, MRZ. Morgan Poliquin, young guy, very smart guy, president of Almaden Minerals, AMM in Canada. And Rob McLeod, another very aggressive, smart geo, who's got a bit of market sense to him too. He's involved with Michael Williams. So those are three that come to mind that I think are ones that I would certainly watch. But I don't, probably the next big discovery is not going to come from anyone we know.
Mickey, put your mercenary cap on.
Same question?
Yeah.
Okay.
Which kids should we
Well,
be behind?
I'll preface my remarks by saying we lost a generation of geologists and engineers during a period, say, from about 1980, late 1980s to the early 2000s, when there were no jobs in our business. There was only one David Lowell, but David Lowell has given us the footprint for success, and that's boot leather and drilling. So I would be looking for geologists who like to get in the field and walk the ground and not sit in the office with their GIS and computers. The guys that walk the ground and understand that we find ore bodies with boot leather and drilling.
And do they have names?
They do not have names. If I knew who they were, I'd be
wouldn't tell
involved
me, I know.
with their companies right now. That's a tough question. I have no idea, Rick.
Well, greed and larceny compels me to ask it.
Yeah.
I can't help myself. One of the things that was interesting to me is in the hall before we came in here, we were talking about what we were going to talk about. One of the problems I notice in the business is there seems to be sort of 3,000 juniors, fully half of them at least, lame, halt, and blind. And I think we all agree that the extermination, if you will, in a bear market of 1,000 lame, halt, blind issuers would be good for the industry, if not for those of us who still own some shares in the lame, the halt, and the blind. And Mickey, you said something interesting outside. You said, that notwithstanding, we should be financing startups. Now, financing startups has been very good to me personally. Having the guts to write a check at the beginning where you enjoy a successful effort is a wonderful thing. But I'm curious from the point of view of the industry and the G&A leakage and stuff like that, from the industry's perspective, and I know that as a mercenary, neither you nor I owe the industry anything. We owe our clients something. But why would we finance startups as opposed to recap a company that spent $20 million, 10 of it wisely?
Well, I'll recap my experience. I'm still making money on companies I'm a founding shareholder of in 2003 and 2004. So I very much believe that getting in early with seed stock or founder stock or pre-IPO stock is where a significant amount of money is made in this business. There are 12 gold companies in the Forbes Global 2000, and that's the largest 2,000 public companies in the world. 12 gold companies, 6 of those 12 started on either the Vancouver Stock Exchange or the Toronto Venture Exchange. They are Barry Gold, Gold Corp, Yamana, Kinross, IM Gold, and Eldorado Gold. They all started as juniors, and now they are in the top 12 gold companies in the world. So it tells you right away that we are the people that found these stocks, seed these stocks, and although the odds are very slim that they will be successful, ultimately the rewards are great if you can pick good startup companies.
Brent, same question to you. And I think the question might have two parts. You can ignore either if you like. Investing in startups, good for the industry, good for you, as opposed to recapping some of the value that may have been created in existing vehicles that need to be refinanced and brought forward.
It's hard to imagine the world needs any more junior exploration companies. That being said, I would selectively invest or put money into a new company that was well-structured with a unique idea or exploration program or property. But by and large, I think, you know, for most of the people that read my letter, they don't have that opportunity. And I think there are a lot of opportunities out there to put money into projects and companies that have done a lot of work. As you say, spent $20 million, or somebody else has spent $20 million on a project, it's gone bust. And a smaller company, take for instance Radius, or somebody company with $20 million in the bank, moves in, reinterprets the data, and can come up with a legitimate target and potential discovery. So I think that's probably the better place to be right now.
John?
I think the model of tightly structured IPOs where a select group of people own all the paper and then they list it publicly at some high price and then coax newsletter writers to come to conferences like that and tell them the public to buy it at $2. I think that's an obsolete model. I like companies that actually have liquidity if they're, 10, 15 cents. So what if they have 100 million shares out? Most people know how to do basic arithmetic. And having the public be able to go in and buy stuff anonymously, even bigger institutions, that's what makes companies with good management, with good projects, strong and viable in this space. So I don't think we need any more IPOs. Recycle the ones that have been beaten up in this sector where they have assets in projects and so on, and management with good ideas and also the energy to keep at this game of generating prospects, testing them, and hopefully one day getting the right one.
That segues very nicely into a discussion that you and I had in the hall. You were talking in the former example about the sort of finance culture around junior mining. The good old boys, and don't look at me too intently when I say that, that have for 20 years structured people, structured vehicles, and benefited from their ability to participate in that activity. And you were talking outside, you made reference to something that I found very interesting, the trading culture. You've discussed some aspects of that in your letter. Can you talk about the trading culture in the context of the current malaise in the exploration market?
Well, anybody who's followed what's going on Wall Street, all the big billionaires aren't really speculators on fundamental outcomes. They're all just traders. There's some massive inefficiency in the system that enables them to strip out other people's capital and concentrate it through some trading strategy. This trading culture has also washed into the junior sector, and we now have just these technical traders lurking in the system. When buying comes in, they sell stock they don't even have. They snuff out the rally. They can short on a downtick, and they don't even have to record it as a short if their account is designated directionally neutral, meaning they're flat at the end of the day. This trading culture is now celebrated in a destructive manner, and it's hurting this sector because these companies, as Rick likes to say, have no real intrinsic value. They just have a potential value, which you have to build up in your mind by going to the people out there and having them show you the target, and then you do the arithmetic. What would it be worth? Apply some mining economics to your imaginary deposits. And if you think it might be worth $200 million if it's there, then maybe like paying $5, $10 million now is the way to go. So the industry is now suffering from the fact that we cannot visualize the value of the potential outcome in a collective way and have the market refer to it. So the traders, they come in and suck the capital out because there's no equilibrium. So we really need some system where people can see what Benton's project, Elizabeth Ann, has the potential for, and then the traders can bash it back and forth around some sort of externalized equilibrium point, and that, of course, will change every time there's new information. That's the challenge right now because we're all kind of flying blind as to what is Miranda's potential with any of its 30 projects. They're all just sort of dots on the map. We need to see what this particular one, Red Hill or whatever, could potentially amount to.
I've had 20 minutes to think about that since we were in the hall, and I think I've got my mind around some of what you said. What I want to ask you about, and I'll draw the other panelists in a minute, is many years ago when I was one of these up-and-comers, I was, and some people in the room know this, involved in some maybe large-scale stock promotion. Haven't done that for 20 years because, well, I've had other things to do. But there was nothing in the world when I did that that made me happier than having a big short position against me. That was a bunch of stock that had already been sold, it had already been placed. It had to be bought back. And it was a fight between me and the guy who was short as to what price it was bought back in. You know, if somebody, like if we had a 20 million share short, and there was some guy or some group of guys who were short 4 against us, if we did our job well, they had a religious experience. And I'm curious, if I was looking to buy and sell stock, why I would be worried that there was liquidity against me from anybody, particularly somebody who didn't employ Brent Cook or Mickey Fulp. In other words, why I would be afraid of interests who spent less time in my, and I'm not trying to attack you, I want an answer. It seems to me that the shorts are really helpful to a market. I haven't been short in this market for 20 years because I experienced myself some of those religious experiences when you're wrong short. Very, very, very unpleasant. So I'm really curious about how the trading culture can overwhelm a good deal, and whether or not it isn't beneficial for a trading culture to take out the bad deals in the sort of Nietzsche sense where that which is about to fall deserves to be pushed.
You have to distinguish between a short position that's based on an assessment of the fundamentals of the company. So if you think if you believe there's a disconnect between the market valuation and what you see potentially in the ground, go short, and you have to stay short because you're going to have to borrow the stock and maintain it, and it's quite risky. And it can have that, if you're wrong, can have that very bad experience of infinite loss potential when it blows way past you. But what I'm talking about is trading that doesn't even pay attention to the fundamentals, that just sits in the system and sucks the money out. And exploration only once in a while has a reservoir minerals type hole where it's so obvious if you're short, you're totally dead. Everything is typically more of an incremental, interpretive manner. And companies, when they do make progress, should have the ability to see their stock move to a higher valuation to reflect the fact that some risk has been taken out of the equation. But now with the trading, they just watch the capital flows and they intercept them and take them out. I think it would be nice if we had a really big discovery that would catch these guys offside, but they're also pretty sharp too. They can detect when there's actually something real going on, and they disappear in a flash. It's the incremental progression, and this is killing the companies because they get stuck in a rut and have to keep financing at the same price. They're in the dilution treadmill, unless of course they're a prospect generated farm out, where then that problem is in the farm-in company's lap, and then they just dilute and dilute, and the earlier risk takers, their reward for their risk gets minimized, and that's not how the system's supposed to work.
Brent, how about you? Are you afraid as a speculator about a bunch of non-geologists doing algorithmic trading against you in a stock like maybe Almaden?
I guess the honest answer is I have to defer to John. I really don't understand how that all works, and I tend to avoid religious experiences.
You mean you never go short?
Yeah, I have some personal experiences short, which given the fact that I'm trying to get business from you all, I won't relate, but they were not by and large present. Mickey?
Well, I will defer to
mercenary
John.
cap on.
And I will defer to John, too. I read his article in the Gold Report, I think, last week, and I read it once, and I felt like I needed to go back and read it at least once more to fully understand where he's coming from. We have had a problem, I think. Part of what you're referring to is naked shorts, and we have had we had problems with naked shorts, and I presume they are ongoing. Personally, I'm a venture capitalist. I consider myself an entrepreneur. This is gambling. What we do is gambling. This is high risk and high reward. Personally, I have never shorted a stock in my life. I don't even know how the exact details and how to do it.
Get a better broker, Mickey. I'll help you.
Go long on.
If you just get a better broker, I can help you with that.
Yeah. But I always find something to be long on, whether it's a commodity, an exploration play, an advanced explorer, a new mine development. There's always something to be long on. And so for me it becomes, do you think the glass is half empty or half full? Well, it's always full of of either liquid or air, but I'm one of these guys that think it's at least half full of liquid at all times. So, and that comes from being a geologist. You have to be an eternal optimist because our chances of success are so slim.
I'd like to ask the sponsors how much time we have left.
5 minutes? It's about 5 minutes.
Oh, hell, they're going to give me all day. All right. Works for me. Works for me. I'm going to revert to form and start on the far left. Mickey, give me a theme. Give me one speculative theme in terms of the exploration business for this part of the market that a mercenary could employ that other people haven't talked about from the podium.
I'm not sure I understand the question.
Some people might say that the right thing to do right now, I've been quoted as saying this, the right thing to do right now might be to buy high quality, high capital efficiency, pre-feasibility gold deposits. There are a whole bunch of ideas out there in the world, and from my point of view in bear markets, the good news about bear markets is that people don't pay any attention to long ideas. And you can get a good idea and you can employ it without too much competition. And if the market turns, you can make a boatload of money, which is why this audience is here listening to us. I'd like you to put on your mercenary cap and make people a boatload of money right now.
Well, like you and I share one common characteristic, if not other ones, besides the fact we like to drink wine. We're both contrarians. So I look at this as a fantastic buying opportunity with some really beat down stocks. I cover, if you look at the companies that sponsor my website, and I cover, there are 6 of them. There are 2 gold companies, a uranium company, a copper company, a prospect generator, and a graphite company, and a soon-to-be tungsten company. So I'm all over the map on that. I look for the right characteristic share structure, people, a project type share structure, people have had experience and done it before, and a good project. Everything's undervalued. To me, this is a fantastic buying opportunity. I would like to find a good platinum palladium company right now. I haven't been able to do that. I'm always looking for a good copper company.
Brent, I let Mickey off too easy. Magic bullet. Give me a theme in this market. Give me an idea. Doesn't it need to be a company, although it can be a company. Give me something that other people aren't talking about, other people aren't thinking about, that you can get on board while nobody's looking.
Well, I think someone has to, you've got to consider what your perspective is on the metals prices. If you're positive, right now the major mining companies are cheap. Take out options on those. What I'm doing is looking at, I can identify projects with solid value based on feasibility studies or my own work that are selling for 1/10 to 20% of what they're really going to be worth at today's metal prices. That's the place to be for me.
John? Magic bullet.
With regard to the advanced projects, I think the concern now is that, if we do see gold drift down to $1,400 or something like that in the next while, the companies will get really low valuations, and there will then be a clean-out event where you get 100% premium on a stock that's down 90% from where it started. So I'm actually focusing on something different. I think in this type of market of sideways or perhaps lower metal prices, I'm swinging for the fence with high-risk, high-reward exploration juniors, and you got to have a dozen of them. If you put your money on one of them, I guarantee you will lose. So now's the time to go out there because the market is assigning 0 premium to the exploration potential of an exploration target. And there's a number of companies here that fit that description, and I talked about some of them yesterday in my keynote, which is now posted on the web if you want to track it down.
Ladies and gentlemen, given that this was a free conference, I'm absolutely certain you got your money's worth out of this panel. I hope, in fact, that we deliver a premium to that, but I'd like you to join me in giving my panelists a round of applause and also an applause for the employees of the sponsor. Gentlemen, thank you.
Thank you.